Hi, everyone. My name is John D'Agostino. I am head of strategy at Coinbase Institutional. I'd like to welcome you to the inaugural kickoff episode of Coinbase Institutional Presents On the Record, the Future of Finance. Thrilled today to be here with the second most exciting thing to come out of Canada in the last couple of days next to the Blue Jays, Pascal St-Jean, founder and CEO, 3iQ.
Pleasure to be here.
Pleasure to have you here. And we've known each other for quite some time. And you are the OG, right? All the kudos, we read about all these new ETFs and products being launched. It's a wonderful time, but you've been doing this longer than anyone. Mm-hmm. And you were a trailblazer through your business, through some of your litigation you had to pursue, and you paved the way. I think to some degree, we're standing on the shoulders of giants, and the industry owes you a big thank you. So that being said, what has changed in the last, say, 6 to 18 months in terms of your business and how bullish you are on the opportunity set going forward?
Ultra bullish. I mean, the biggest thing, and thank you for that, but really it was a team effort, and even the investors and everyone just believing in the mission. And that's what we were talking about on stage earlier, is the mission-driven focus. What's happened in the past few years has been the shift from a regulatory side in the U.S. Because for a while, we met in several global conferences. Coinbase is global. 3iQ was forced to expand globally. So business started in Canada, we had a US presence, and then things kind of went on ice in North America during FTX, right? It's like, no, the regulators didn't want to talk about it, saying, okay, the products that exist, that's fine, don't ask for anything new. Mm-hmm. The US, well, we don't have to repeat the past, but basically we all started venturing into jurisdictions where people were a bit more forward thinking. With that being said, with the change in the past election and the change from a regulatory perspective, all of a sudden it's game on globally. Mm-hmm. And everyone that we were talking to that had crypto teams that were basically under the radar, we knew who they are, we're talking to them. We just can't talk about it. We just, we're working it. They were waiting for this moment. So all of a sudden, it's not, what happened isn't just because it was an overnight success, is that everyone was building under the radar, waiting for the US to take a stance. Because if it stayed negative, who knows how much longer it would have been. But this positive shift, all of a sudden, all these teams became the internal kingmakers. And all of a sudden, boom, globally, everything's exploded. And those individuals have become the thought leaders in those organizations. That's the biggest shift that we've seen.
Excellent. So we know that regulated products are easier for institutions to digest. Mm-hmm. We know that. That's a fact. There's, even with this glut, some would argue, of regulated products that are hitting the market, there's still this perception that institutional investors are holding back. They're still tentative. So do you agree with that?
Yes.
And if so, what are we waiting on? What are they waiting on to come in full steam?
So great question. And it's more around portfolio construction and investment committee decisions than it is about regulation or do we believe in this. I can tell you everyone's having a conversation. The reality is we're not doing ourselves a great service as an industry at just blanketing everything as crypto. So when I talk on stage or when I talk to investment committees, I say, do you treat ETFs as an asset class? Well, they're like, no, it's a product structure that gives us access to different types of assets, right? You have ETFs that have equities, you have ETFs that are doing, fixed income, you have ETFs that are doing a bunch of different things. Same thing with private products and things of that nature. Mm-hmm. So why are we painting everything as crypto? Why are stablecoins under the crypto market cap? Really, they're just a tokenized, treasury asset. So we are trying to do a better job at educating the people we talk to on what is Bitcoin and what does it serve? What is it trying to do? Why does it exist? Are you bullish on tokenization? Yes. Are you bullish on stablecoins? Absolutely. Well, you should be bullish on infrastructure that this all works on, the layer ones. Oh, so the layer ones are different than Bitcoin. Yes. DEXs and this and that. All of a sudden, there's applications built on top of this. So when you start deconstructing this world, yep, right, then all of a sudden they start getting the use cases. Then you can bring it down to a portfolio manager discussion, yep, or an IC discussion, saying, okay, now that you understand that they're different, let's talk about their role in a portfolio. Mm-hmm. If you are looking for a macro hedge, maybe you want digital gold, maybe you want Bitcoin. If you are an infrastructure investor, like I was just on a conference, on an institutional panel recently where we were just infrastructure debating around, investing in energy, investing in data centers. And I was talking about investing in crypto infrastructure for the future of finance, aka the layer ones. Mm-hmm. And so people got the narrative. So now you
not miners. When you say crypto infrastructure, you don't mean miners.
No, no. Well, that's one.
Okay.
But basically also investing in Ethereum, Solana, and the layer one settlement.
Sure.
Like as an infrastructure, if you believe in all these things are being tokenized, they require, a layer one settlement solution. So you have to change the narrative and give them bite-sized pieces to understand. And then we can start having a portfolio allocation discussion, and then the money comes in. So that's the thing we're working on. I hope the industry picks up on the trend.
Pascal, to some degree, everything about blockchain, this entire thing that we're doing is about innovating and expanding and improving on the legacy financial system. However, there are always lessons to be learned from the legacy system. So what are some ways that people in crypto and blockchain, what are some lessons that they can learn? And what are lessons we can take from traditional public markets that make our offerings stronger to the average consumer?
So to me, it's the theme of convergence, right? And so the reality is, regardless of disruptive tech, yes, there are technologies that have completely eliminated certain players, like the internet eliminated, certain things, but they've also allowed other, players like the telcos to reinvent themselves as a business. In other words, the telcos were like not an internet provider until all of a sudden they start creeping on their business, and now they're like, oh, we're an internet provider, we're also a TV provider. So it allowed them to expand their business once they accepted the technology, right? So what's happening here in our case is, we're not creating a parallel system that all of a sudden will replace the other one, the next day. The reality is convergence is happening. And so the crypto community needs to understand how, these behemoths function, right? So in other words, when you're sitting across the table, you could speak about technology and about how things are better all day long. I'm an engineer. I've sat across the table with other engineers, selling a business piece of software that unless you built the case and you understand everyone's role, the IT person's role and the compliance person's role and the C-suite. So the CFO is looking for a return, the compliance is looking for risk, and the IT person is looking, how long is this going to take me to integrate in all the stuff I already have to do, right? So if you don't do that, then you're just selling your narrative and you're not listening to others. So I think we need to do a better job of understanding the room. And so we announced, again, there's several big announcements on the sovereign fund side, on the banking side. Those took years in the making, but we had to sit down and listen and put ourselves in their shoes and speak their language and basically make it easier for them to understand. So if we do a better job of that, of reading the room and speaking the language, understanding that they're not trying to be people, they're not trying to be roadblocks. They have a job to do, respect their job, help them to accelerate their jobs. So when I work with the compliance officer, how do I make their job easier? How does my compliance officer make their job easier? When I'm talking to a CFO, how do we make their analysis easier for them to say, let's allocate? So when you do that, then things could progress. So I think that's the biggest thing that the industry can learn, instead of just banging of how better the tech is or how faster it is or how they're stupid to not adopt it or how they're dinosaurs for not moving forward. It's the wrong language.
It's a wonderful segue into the discussion about your announcement of your partnership with Further, which is a 82, for those who don't know, is one of the most substantive, largest, and most progressive and innovative sovereign wealth funds, not just in the UAE, but the entire Middle East.
Correct.
Now, as someone who's been going there for 25 years, who's read lots of announcements about MOUs and sort of vague partnerships, those are easy to get.
Yes.
What you've gotten is a financial commitment and a true partnership.
Yes.
That's very, very hard. That takes a tremendous amount of work. That takes a lot of the nuance you were describing before of deeply understanding who your partner is and what they need.
Correct.
So talk me through how that happened, and then we'll talk a bit about what your plans are.
So the first one was around relationship building for us. Our business was born in Canada. Like I said, we've expanded in different regions. We determined that the UAE was an important one for the industry. We saw them as being very progressive towards crypto. But we also, again, in every region we've committed resources and a commitment to expand a business locally. And so we, like Coinbase, had hired people locally, flew there very often, building relationships and playing the long game. It wasn't if we don't see results in 30 days, we're going to go somewhere else, right? So we've been there for 4 years, and forming the trust and having meetings and educating. And sometimes—
How many trips do you think you took over 4 years?
I'm there every quarter.
Okay, so you as the CEO took over 12, maybe 16.
Probably
trips.
more. And at the
16 to
beginning,
20
and at the
trips, right.
beginning,
Yep.
yeah, at the beginning,
Good.
my wife and I moved there for 4 months.
And you lived there for 4 months.
The first stint was just
But it's important. I think it's a lot of people ask me, like, how can I build these relationships? And I think it's important to actually give numbers on the amount of time, attention, and resources it takes, and for the senior leader to make that commitment.
Correct.
Yeah.
So time, commitment, energy, and then from there, once you start, playing the what are the opportunities, building that trust, then the conversation becomes, okay, who are the thought leaders over there, and they are very pro partnerships. Like you said, once trust is established, the region are very pro partnerships, and have attracted amazing global leaders to come and establish their businesses over there. So once they determined that they wanted to move in the liquid active space, then there was a general search of, like, okay, well, who are we going to partner with? There's not, thousands of individuals doing what we do on that side. So it came down to trust. Okay, there's 3IQ and there's a few others. And then it came down to the technical capabilities and the understanding of what all these layers of management are looking for: the risk management, the diligence, the backing from our parent company, which is also a publicly traded company. So who's going to be there for the long term? Who's going to be there when we want support? And who's going to have our backs as we go and commercialize this? So there was all these discussions on branding, on support, on true partnerships, on allocation of time, money, and effort. So all those conversations were put on the table. And I think it was very refreshing from both sides, because, again, we've been on the other side of the table with multiple people reaching out for partnerships, and you could tell it's not truly looking for something. So they had a vision, we had a vision, the visions were aligned, and we're very excited about what's to come. Yeah.
So I mean, look, and I know those guys, the Further guys, are wonderful.
Yes.
Great partners, smart. Sovereign wealth funds are, especially everywhere in finance, but especially in crypto, are they're kind of viewed as the holy grail, right? Everybody, when are the sovereigns getting in? We want the sovereigns. And of course, they're wonderful capital, right? They're patient, they're massive, they're smart. But there are idiosyncrasies of dealing with sovereign wealth funds, right? So it's a unique relationship, right? They're a nation state, right? It's very, very different from taking money from a high net worth individual or an asset manager or something. So curious, when you think about, like, the huge advantages, what are some of those idiosyncrasies you have to consider when working with a partner who is also representative of a government?
So for us, it's around communication and transparency, and that's something that we've always had as a part of our DNA. But being able to speak their language, being able to commit to having those harder conversations if and when they do arise. Like, for example, during the Binance situation a few weeks ago, right? All of a sudden, everyone's, globally probably wondering did anyone blow up? Who blew up? What happened? Who was properly structured, right? And you can imagine that our team, our managed account platform, which this partnership is built on top of, was built with counterparty risk diversification, manager risk diversification, all those things that TradFi is used to, we brought into crypto. And so, we went over that without losing sleep, and it was by design. But trust me that they wanted to know, what happened, and our team was there over the weekend, talking to them, sharing the data, bringing on the other managers. So communication, transparency, and being ready to support when there's hard questions is a must. So that's just part of what I call servicing any institutional client, whether it's a sovereign fund or a pension fund or a partner. We have built 3IQ to be a partner of choice, and that means that customer service or partnership management is critical to us. It's not ignore it, ignore the emails, ignore the phone calls when it's hard. No, you pick it up and you have those meetings. Okay, so you mentioned the sort of Volmageddon that we had, which seems to happen fairly often, but this was a biggie, right? Yes.
October 10th, roughly, over the weekend. Horrible timing over the weekend. Massive price dislocations, liquidity gaps, ADLs stopping people out, all that stuff. What was, now that we have the hindsight, the benefit of hindsight of that, what was the number one lesson you learned? So one thing we do, or I've brought to the team from my engineering days, is the Morgan's laws of what can go wrong will go wrong, right? So we play these game theories all the time of, like, okay, let's play these market stress scenarios of what would happen, and how are things built and how will we react, right? So sort of emergency situations. Now, we hadn't predicted this one, but depegging and liquidity concerns and, one counterparty going offline for a certain amount of time. These are all things that we have done in the firm. And quite frankly, our parent company now, because they're publicly traded in Japan, have a
a risk management mindset that forces all their companies to think about risk management that way. So we are tested all the time with scenarios of what would go wrong. So for us, the lessons learned was we need to continue to do more of that. I think the industry needs to continue to do more of that. And as cool as some of these sort of wrapped innovations happen or wrapped tokens or things of that nature, have a sequence of R&D battle testing before it's deployed, just like software, right? And usually you have your R&D code, you test, you go in a staging environment, then you release to a certain amount of clients, your VIP clients, and then the VIPs will tell you it works, and then you deploy to everyone, right? So how do we take engineering sort of philosophies and bring that into asset management for crypto because it's so tied to tech innovation? Right. So that is probably a new philosophy that we are going to establish more, is that we have an R&D center, but we're going to move more towards that R&D phased approach, staging, and then deploying to institutional products.
And I think in some ways, maybe this sounds overly optimistic or trying to rationalize, but the fact that crypto does exhibit these systematic and periodic surges, volatility surges and price dislocations, in a way that tests the infrastructure.
100%.
Because one of the problems with the testing phase of R&D production is if you set the parameters too narrow for your test, then you think, okay, we're safe, we release it, and then the market says, oh, really? Hold my beer. Let me show you what real volatility is, and everything breaks, right? But we are lucky enough to live in an asset class that tests us all the time, and I do think that builds more resiliency.
100%. And I mean, look, this is again, talking about using the right words, that the crypto infrastructure itself, right? The non-human governed systems, the tech systems, functioned without a blip, right? So the centralized players where where humans involved and engineers involved, and then you layer on extreme leverage on top of that. So you track leverage and you track what's happening, and then you can start predicting when that deleverage is going to happen. Now this one was a major test, but again, these are the things where it just builds trust that managers, the industry, et cetera, survives this without much collateral damage. It means that we're ready for that next phase, because everyone was waiting for that next FTX sort of test, right? And I don't know if it's not an FTX moment in terms of anything illegal, but in terms of market dynamics and being tested globally. And then next thing you know, Monday happens and everyone's still
back online, didn't break.
Correct.
I am struck by the realization that I think one of the reasons we are hearing about major global equities exchanges starting to seriously experiment with tokenized equities is the irony of all ironies, is that the resiliency of that potential infrastructure like Solana and others has been proven by meme coins, right? How ironic is that, right? Our most serious systems are starting to think we can exist on these infrastructure platforms because they've seen the testing phase of millions and millions of transactions and billions of dollars worth of value being transacted 24/7, 365 for meme coins.
I love that narrative. It was the first time I heard you say that on stage. And again, these are the nuggets that help to build that translation communication with these institutions. And when you said that, I'm like, that makes, it's a great way of looking at it. It's a battle testing ground for the infrastructure. Love it.
Compression and transfer of YouTube videos was tested by cat videos. Pascal, so we have this renaissance, if you will, of public vehicles, right? Digital asset treasuries, and then tokenization as well, right? So everything's going to be tokenized. We're moving that to Larry Fink said the whole world will be tokenized. Do you see tokenization as a concept to be competitive or accretive to vehicles like ETFs?
That's a fundamentally great question. But to me, I see tokenization as the ultimate use case of the tech and why we're bullish on it. But fundamentally, let's just play the mental model backwards, right? If tokenization doesn't do what it's supposed to do and doesn't pick up, then that means that a lot of this infrastructure we're building, all right, it has the value is fundamentally potentially vaporware, right? So tokenization means that layer ones and DEXs and everything we're building is a better system, all right? Which means that the value associated to these that are linked to ETFs and other products have genuine value. So to me, it's a ultimate use case of everything in the past, whether you believe it or not. And this is where a lot of institutions are coming in, is they're seeing, the stable coins and the tokenization use case, and they're seeing the adoption. So for us, it was always a logical, inevitable way that this is going to function. The technology works. It's how long is it going to take? Now, when you fast forward, you got to fast forward way into the future, which I don't know if it's going to fully replace us. I mean, you still have cobalt running in banking systems on top of that, right?
Yeah.
So you still have private mutual funds running, even though there's ETFs, right? So AUM, when it's captive, or products that are captive, don't disappear because there's something new. So there will be a moments of coexistence, including most likely moments of convergence, where you make sense to say, okay, well, we have regulatory frameworks and all the fund structures and administrators to run a diversified ETF. Let's tokenize that and globally distribute it. So all of a sudden, the ETF is the mechanism to get the fund together, and your tokenization wrapper gets you global distribution. Something like that, I think, is what we're going to see first.
Got it.
Will it fully replace? Again, the cobalt.
These things take time.
They take time, and the cobalt story tells me
37% of America still uses a landline.
Really?
Yep. I looked it up recently. So these things, trends take time.
That's usually what I tell people, yes.
Wonderful. Pascal St-Jean, thank you so much for joining. This has been great. Really appreciate your time.
Thank you.